Chee with us to share with us the latest market outlook, especially for this month. And he's really the specialist expert and fundamentally pretty sound. Gave us great insights about the current situation about stocks, about indices, and even the FX aspect. Now, lately we understood that stocks, prices has been coming down. So we do have some traders that they could be probably bought at a price that is a little bit high, and what should they be alternative for them to look into, like for example whether should they just cut loss and start to short now, or should they just hedge it, so maybe we want to seek the expert's view.
Okay, regarding, let's say you have Tesla, I understand that a lot of people, especially in Singapore, their favorite stocks in the US is basically Apple and Tesla. Mainly Apple and Tesla. Because these two stocks, I think sometime last year they actually went through a stock split.
Yeah.
And also it attracted a lot of attention and a lot of people went in to invest. So what happened is there are two things you can do. It all depends at what level have you bought the stocks. For example, you bought at a very extreme low level, that is last year, and then you find that your price keep on going down now. So what you can do is you can hedge it. Okay, that means you hedge your profit so that your profit is protected. So you can actually, if you are using AIMS FX, you can actually short Apple or Tesla, to hedge your profit. And then after that, you can still have an additional short position to capture the profit for the downside as the price continues to go down. Okay, so these are the things you can do. But on the other hand, if you have bought these two shares or either one of them at a pretty high price, and you are still holding on to it and you are no longer in the profit, okay, you are no longer in the money and you are having floating loss now. Okay, I need to make it very clear. The first scenario which I shared just now is you still have profit. Okay, so you hedge your profit by shorting the stock itself. Okay, because AIMS FX have this hedging facility. Now, in the event that your stocks are already out of the money, that means you are having losses already. So what should you do? It all depends. If your losses are marginal, not much, marginal means it's only 2%, 3%. If you want to cut, you can cut it. Okay, take the loss and then short. Open new short position. Okay, open new short position. Now, why do I say that you don't go and hedge your losses? Right, you can also hold on to your losses and then hedge it, because my experience tells me that psychologically, if you hedge losses, you tend to close your short position the moment you see profit. Because as the price goes down further, your short position, which you use to open to hedge your losses, is definitely very profitable. You'll be tempted to realize that profit. So the moment you realize the profit, that means you close that short position, you actually expose a very big hole, because you still have your long position. Unless you are psychologically very strong, that means you are committed to hold that short position until price has dropped to a rock bottom, which is not easy to identify. Then what you need to do is not to close your short position, but to open an additional long position from the bottom. So that as the price recover, what happens? Your long position will later offset your short position. Or you open double long at the bottom. That means double long means you have one short, right? To hedge against your previous losses, and then you open double long. So that one of the long to offset the short, and the additional long right from the bottom is a profit. So that once the price has recovered to the break-even level, you close the short and one long, offset everything, then your additional long from the bottom will give you very good profit. more than enough to cover your first long position, which was a floating loss previously. So I hope you understand what I'm trying to say. If you have utilized the hedging facility from any forex broker, you understand what I'm trying to tell you.
But there must be like a sizable margin that is, enabling them to do this hedging.
Yes.
Or like their capital, they have to look into whether.
Okay, because when you short to hedge, there's no additional margin required.
Okay.
The only additional margin is required is when you double short. When you double short, that means you have an additional short to profit from the short.
True.
You know?
Yeah.
But then when you come down at the rock bottom, assuming you are able to identify the bottom, you have closed your short. You make your additional short. Right? You close your additional short, you leave your one more short to hedge, then you open another long. So that when the market recover, you gain from the rock bottom entry to long.
Yeah.
Because I think you should have enough time to go and top up in case you got not enough margin.
Yeah, I think it's a safer,
you should have
to
enough
last
time to top up.
to last this.
So you go and compute, you go and calculate, do a fast, quick calculations,
Correct.
see how much you need to top up.
Correct. But like for example, if the stocks like for example what you mentioned, say Apple or Tesla, it makes sense for us to still keep that.
It all depends, like I say,
Yeah,
if you feel that you actually bought at the top,
Yeah.
at the top of the, you got to see the chart, you bought at the top and then you are now 3% off, you should have cut it long ago. But I think already, market has already came down quite a lot, so if you cut now, it's very painful. So if you feel that it's painful, you better go and hedge. You hedge, but you need to hedge one for hedging and one more for profiting the short.
Agree. Yeah. Okay.
Otherwise, it's not worth because you'll be you will not be making any money when the market comes down.
Correct. So at least two short positions.
Yes.
Yeah.
One for hedging and one for profiting.
Okay. That's.
So this is easy to say, but it's not easy to execute because psychology, your emotion need to be very strong.
Yeah.
And then what happens is that a lot of people I know, the moment they execute, assuming they can execute, I can tell they cannot sleep because it's a US market. US market is a good time to sleep, and then you will every time wake up, see.
Yeah.
3 o'clock wake up, go toilet, see.
Correct.
You tend to have this kind of anxiety.
Yeah. But don't let this anxiety affect our lifestyles. It may not be worth. That means you have to calculate the extra cost of this anxiety into the price to see whether is it worthwhile.
Intangible cost.
Yeah, the intangible cost,
hopefully it doesn't affect your health.
Yeah. And also the mood that we have with our surroundings, that we become so moody and then our
That's
lifestyle
why
so much affected.
a lot of traders like to talk nonsense and like to joke. Basically, it's to get rid of.
Release that stress, emotional
So
stress.
you kind of have coffee with me, you tend to.
Yeah, I'm sure. That's why just now we were saying that, when we're don't know what to do, and then you need some, actually it is quite correct because when we get more relaxed and we laugh it out and we could have better clarity, right? Better stability to decide whether, is it wise, especially but to find the right pricing. To make the decision, the right pricing, and because rock bottom, we also really don't know when, right? So that decision making, yes, is really.
Maybe I just give you guys some tips. Is that right now, as you know, that the whole world is shortage of semiconductors, microchips, and this has already affected production of electric cars because they also need microchips. This has also affected the smart devices, production of smart devices for the Internet of Things. So I suggest only, I'm not giving advice. Once the market starts to recover, you should be looking at semiconductor stocks. Both in Hong Kong, Hong Kong SMIC is listed in Hong Kong, as well as in US, like Micron, all this. Because they will be the first one to rebound due to the shortage of semiconductors.
Right. Okay. That's good. good. That's good. It's like market always there, but whether you are there to recoup back your capital. So even when there could be a loss, let it be like a good learning experience, and it's how we really look at it from that perspective to rebound back strongly, right? So yeah, thank you so much, Clarence, for sharing that special tips. If you are entangled in this situation, what should you be doing? All right. Yeah. Thank you.
Subscribe to our YouTube channel and click the bell reminder so you won't miss any special monetization opportunities. Go follow now.